about sort of the cautionary winds that we're hearing, or the whisperings that we're hearing? Or maybe it's not even whisperings, it's like people are shouting loudly, don't invest in real estate right now. What would be your response to that?
Or like foghorns at this point. But it's another thing that I love about multifamily is that it's truly a terrific opportunity at this point, because what we're seeing is there's some stress in the market as far as interest rates going up. Values, they can come down, and they have in the past in multifamily, or in real estate period, but it always goes back up. And so it's just about weathering the storm right now. If you're already holding the property now, we've seen some of our interest-only loans that are on variables go, that interest only is what you're paying every single month. And we've seen that go up dramatically. So that does kind of, take some of the wind out of the sail, so to speak, on the profits. But as long as you can weather that storm, it will come back going forward. And we are also, because we're in the value add business for multifamily, we're able to increase the values of these properties through renovating these units and being able to make them a better place to live, and people are willing to pay more to live there. The currently on what we're buying, our pencils are not down, but they're just sharpened extra sharp right now. And if you can, and if buyers will need to reduce prices, sellers will need to reduce prices in order to make it make sense right now because of the loans, right? If you're going to take a loan. So unless you're buying it all cash, which most people don't, you're going to need to make money on it with the current loan at a higher interest rate. So if you're able to find a property that you can make that pencil out, the good news is that when the rates go down, you can just refi, and now you're going to get a much better interest rate, and you're going to be making even more money on the properties. There is some properties that will see some stress. Most of them, these bridge loans that people have gotten into, which we have also too, but fortunately we've purchased what's called a rate cap, which means that, your rate can only go up so much. Like it has like maybe a 2% rate cap. So if you buy it at 4% interest rate, you can only go up to 6%, and anything higher than that, then they will pay for it. So it kind of guarantees you, for not to go up to that 8, 9, 10% interest rate. But many did not, and some property owners that have purchased in those without the rate caps are going to run into some problems, right, where maybe they can't even make the payment. So they will in fact need to sell, or they just want to get out of it, and if they're not making money. And so there's always opportunity, and I think that's ahead of us right now. So it's a good time to get in.
So what you're saying is that you're projecting that that's happening, but we haven't seen the price decreases or the sale prices that some people have been expecting in the multifamily space.
Right. We've seen a little. We have seen some prices come down a bit on some sales, but a lot of owners really have not kind of dealt with that yet. I think they will coming into the new year. They're going to have to make a decision, right? If they're in that position where they're either losing money or they're not making money because of their loan, they have to either refi or sell. And a refi is harder right now because the interest rates are higher, the loan to values are lower, so they have to have more equity into the property in order to refi. So they kind of get into a situation where they almost have to sell. But yet a new buyer can come along, right, with a new loan, and it can all pencil out where the current owner cannot do that. So it kind of forces that situation to happen, and opportunities are there to take advantage of that.